the odds are in your favor that rates are not going to go down.
All right, so I was talking to one of my friends, Brian, this morning, and we were just having a great conversation. And he has said some stuff, and the way he articulated it was better than I can do that. So I asked him to jump on camera. So this is our conversation we had this morning, and honestly, I think it's some really good information. So check it out.
Hey everyone, Brian Souders, Sterling Retirement Group, your fee-based financial planner and investment advisor here in Roseville, California.
Sweet. So I know we were just talking about inflation, and not only inflation but mortgage rates. And I was saying in the last day and a half, like yesterday or this morning, I woke up to a text from MBS Highway saying we lost 70 basis points daily in mortgage rates, and 2 days ago we lost another 40. So obviously things have been really fun after the Fed meeting with Powell and with everything else. So I know you were mentioning with oil prices and inflation, I just wanted to get your thoughts on kind of the way things directly impact each other.
Yeah, right. Well, the mortgage rates changed, but nothing changed in regards to the federal funds rate. So why did they change? And a lot of it does have to do with the anticipation of oil. And so I've been doing an educational deep dive for myself to try and put all the pieces together. And one of the things that I found is that the prices per gallon of oil, per barrel of oil, was about $55 per barrel back in January. And now it's $95 per barrel of oil. And what you can find out about that is that for every $10 that each barrel goes up in price, that affects typically our inflation for CPI, which includes food and energy, by about 0.2%. So if we're at, just to make the numbers easy, if we're at 3% inflation rate and we see the price of per barrel of oil go up 0.8, you're going to find that you're going to go up to 3.8% inflation. So, and some analysts are saying we could go up to $150 per barrel of oil. So if you think the inflation rate is going to go up, then you're also looking at the future of what the Fed is going to do in terms of interest rates. And they have no reason to cut those interest rates because their job is twofold. Number one is to keep the inflation down and also to keep unemployment low. Yeah. And so with that one factor, you can look at it and say, you know what, I don't know if rates are coming down this year at all. But it's speculation, and a lot of it with oil is also not necessarily based on whether or not oil actually changes in price, but it's the fear premium that happens, and that's what countries manipulate when they manipulate the price of oil.
That's interesting. Well, and especially like what is that? The fear greed index.
Yes.
Like looking at that, especially right now with the wars going, or with impending war.
Yes.
Whatever you want to call that.
Yeah. Geopolitical conflict.
Yeah, literally.
Right? Yeah.
All that stuff. And then you're looking at mortgage rates, and a lot of people have been assuming for the last couple of years that rates are going to come down. I know we were talking about that. I have a couple clients that were kind of on the edge of whether they walk or not, and people want to see rates keep coming down.
Yes.
But realistically, rates are impacted by so many different things, and this is a huge one. Is over the last couple of years, that's been the biggest fight, has been inflation. And
that's right.
Whether or not they're getting the correct information when they're doing the inflation reports has been a big one with mortgage rates, of actual versus what's predicted. But that could do a lot. That could really bring mortgage rates back up for a while.
Well, and I would go one further to say, from this vantage point, you could make a very calculated decision to say that in the next 6 months, the odds are in your favor that rates are not going to go down. Simply because there's no reason for them to.
Yeah.
The Fed is going to keep things the same, and even with this new chair coming in, to be honest with you, there's no reason. Unemployment is still low and inflation is rising. There is literally zero reason for the Fed to drop interest rates at this point for the foreseeable future.
Cool. Yeah. Thanks for your thoughts. Appreciate it.
Hey, happy I can help.
Cool.
So hopefully by this time you understand that the Fed cuts don't directly impact mortgage rates, but they are indirectly connected. Now, the Fed cut doesn't push mortgage rates, but it does control the short-term overnight rates for the lending for banks, which will influence mortgage rates over time. Now, the other thing is mortgage rates are really based on kind of what's happening in the market. So with the geopolitical conflict, with inflation, and with jobless claims, it's kind of the big three that we deal with. And the reason that those matter so much, and what we're talking about here with oil prices, is oil prices are going to be changing inflation, which do change whether the Fed is going to cut rates or not. So at this point in time, there is zero reason with inflation most likely going up over the next few months because of the oil prices and the way they've been they're, again, not directly impacted, but the way they have been impacting each other, there's very little chance, if things go the way they assume, with the experts assuming that oil can go up to 150 a barrel, that could have a huge impact on mortgage rates, and we could see things at least stay the same. If not, there's a very good chance they will be going up and not coming down. So if you're all looking to buy, it may be better to do it now than in 6 months. And if you were looking to refi, again, same type of thing. If you were hoping rates are going to come down, there's a good chance we won't see that. Obviously, no one knows exactly what's going to happen, but there's a real good shot that there's no reason for rates to come down anytime soon because of everything going on in the political climate.